Good morning. Looks like a nice light morning. Sleeping in, hanging out. Either way. Uh Futures up off economic data came out at 8:30. Claims are also down. Everything looking good on the economic front, continuing. Again, continuing to confirm the inflationary sort of ideas that we've seen, appreciating everything. Nothing's really changing. It all looks very trend like in what we've seen with the data so far, at least on the economic side. Big thing really woke up today, took the New York Times, and you see $6 trillion spending bill, uh, all three together by Biden. That kind of shook me a little bit. I'm like, Jesus, all three of those plans together is $6 trillion that is on the table right now. That kind of spending, again, it doesn't matter what's going on. That $6 trillion being added to the economy is nuts, right? And those bills are all coming at one time. Again, they're not through. There'll be some compromises, but the spending is still going to be there. And you see the numbers now with economic data, and we talk about inflation being here right now, and then we talk about another 6 trillion. It's just insane. It causes the long term view to be so easy. It's so easy just to take a long term trade. That's without doubt. It's really, again, in the short term that we're looking to find a way to generate some alpha and maneuver around really what's going on. When we have so much sort of positivity around the economic numbers, it does require that we do not go on there. I'm going to use the quote I've been using is that the reopen trade, the economy can only reopen once. And the economy has basically reopened. Now, this trade, in the way in which you buy at this point, from where we have bought from before, we've been buying since, again, the COVID bottom and continue to trade in an aggressive way, swinging over weeks of time, trying to hold over a month or so if we can, and then transitioning to continue to gain an exponential on every single move, but still trading on the trend. The further we go to the upside, the more expensive it's getting. It's causing us to, at the lows, we were getting a similar exponential to now, but we were gaining more overall. And the way in which we're transitioning is very different now. The only time we're really getting points now are when we buy on these short-term pullbacks when there is a little bit of volatility. If you do look, we have taken every single pullback, and that's really the only gain we've gotten. Otherwise, again, it's just the overall trend, which again has been good. I mean, when you look at from the low since the election, that's 30%. Uh, that's plenty of points for me. But when we then look and you add every single one of those dips, and then you continue that, it's a lot of points. And when we look at options again, uh, using leverage to minimize downside, profit on the upside further, and these things are all still there, but it is going to get tougher. It's not going to get easier. It's going to continue to get more expensive, and that's really what we look at when everything is so positive. Everyone's already here, right? We're entering a very crowded room right now, and that's where we continue to look for things that are a little bit out of the box. Continue to buy on fear when there is dips. It's not really fear anymore. And then what we look for is there are some things that we've had biases on, and we look to question them. And we want to be able to take positions that maybe we wouldn't normally take, which again, things like Ford here up another 4% pre-market. Uh, those kind of ideas are important. And if we look at this morning, value doing a lot better than tech. Again, economic numbers come out. Of course, value's going to do well. This is where we are. We're back at the resistance here. Uh, it looks very good in bid off the start here. We're continuing to climb during pre-market. We get 20 minutes to open. It may melt through the resistance by the time we get to open, which would be very interesting. If you put into perspective, this line here is the pre-market number. If the Dow does open between above there, that would be again we would have no resistance to go through. Small caps are in a similar sort of state. Small caps did great yesterday, led us on the way, continue to lead us in pre-market as well. And this is very regional bank heavy, energy heavy. I didn't really mention it too much yesterday because needed to digest a little bit. We had we had the bank chiefs talking at Congress, and then we had a lot going on the energy side. Things like Exxon had again. There's a hedge fund that basically infiltrated Exxon and has now gained two board members, and basically is they're trying to start the conversion on the big boy oil companies, Exxon, Chevron, and get them to go to the clean energy side. Which of course they've already mentioned that they're they're looking, right? And obviously they have to. There's no way for them to exist without converting over, and they definitely have the cash to do so. This does not cause that side of things to come down, for instance, right? That's a good thing. The sooner we see a plan for the largest oil companies in the world to convert, uh, the better it is for them and obviously the world, but for profits and everything else. I mean, this is not negative as much as I think the media has made it out to be, that all of a sudden we have activists taking over board seats. If we talked about this, I got stopped out already, right? We were still up on the day yesterday when all of that was happening. We're barely down this morning on this. And so this is very much just trading on a very similar tone that we've already seen. We know that the energy sector is a little bit more volatile than when we look at banks, even though they track a very similar sort of value orientation. But really, what we saw yesterday did not cause any problems. So I'm going to make sure we don't really go too into it. It's two board seats. The hedge fund owns like 0.01%, which is all it takes to get a board seat. I think it's 0.02. It's really not anything, and it's generally positive. So making sure we're not getting too wild on that. So continue to look good there. So again, value up. Tech is down. I'm sure we'll parse some of the losses by the time we open. It looks like we're already about to. So again, it's just the way in which the demand came in heavy on value to start pre-market. I'm sure open will just be bid across the board. We'll see what this continues. Again, we're looking to break through resistance and then get going from there. I'm going to bring us over to the dollar. We'll look at some indices or look at the macros, and then we'll look at the individual tickers here pre-market. Dollar is still hanging out at this low, and this again, we've sort of stopped moving, and we're at this low. The big question is whether we're going to start the trend back down. We do have this level down in the 80s that I've been talking about that is probably most likely on the menu. It's just a question of how do you get down there? What exactly is the cause for the dollar coming down more? I just mentioned the start of call like $6 trillion in terms of total spending already proposed by Biden. The three plans put together, that sort of addition of spending can cause the money supply to reach a level that is going to cause the dollar value to come down. Again, those timings are very difficult to understand in the way in which swaps come through. That's what would cause this to come down. Currency swaps. I don't really foresee any type of hedging or anything like that would start a move to the downside. So the dollar probably is going to hang out here for a little bit, and we won't really use it for anything. We haven't really used it for much anyway. So dollar, I've just seen some things pop up, but I don't really believe anything that media has said about the dollar so far. I don't think anyone's really doing anything with it because there's just such a strong sort of move happening with the money supply that what are you going to do? The money supply is like 3 times higher than it was before COVID. So what are you going to do? Let's bring it over to Bitcoin, gold. Bitcoin, we've seen, we saw this yesterday that it came through, tested. What we're looking at now is, again, this little bit of error that's possibly in here. If we extend this line from where we're looking at it, it's not enough to confirm that you're out of the woods here, right? In terms of just holding and not breaking down. We continue to sort of come on top of this trend line, test it. We'll see if this candle maybe pivots towards the upside. It's holding, which is probably the most important thing for Bitcoin and for the crypto space, is that it's holding, right? It's consolidating the downwards move, which is a good sign, right? If we just go ahead and now convert this over to something from what we see right now, okay, you know, it's not terrible. It's not as bad as it could be, and it's just kind of consolidating at a low, and that's good. And on the other side of things, which we kind of have seen as being the opposing force, gold is consolidating at its high from the rally as well. Let me just put this on a daily. It's just sort of stopped here for a moment on a similar sort of path where it's on a level. These things can definitely come up, and we've seen in the past where you can get all major asset classes heading to the upside, Bitcoin, gold, and then see the equity market heading to the upside, right? Those things can definitely all happen together. We've seen in the past how bullish that is. Again, it's just a question of why does it all need to come in at the same time? Do we like these things don't no one's in a rush or something like that. Most people have already bought. Most of when we see an influx of buying in an area is due to the repositioning factors that involves with value and growth and the like, right? I don't think we already saw a trillion we already saw $1 trillion come off the crypto market, or at least Bitcoin. I'm not sure uh, we really need to see any more really happen there in terms of rotation. That already happened, right? The buying that came in is a different form of buying and cash that was out there, and we did see the dollar change. So that's that. Let's take a look at individual tickers here, the trades that matter. Ford has just kind of see ya, right? I talked about this a lot yesterday. We talked about the entry back on the 20th and the way in which we kind of flipped the script and took a stab at it, changed it from the course we were looking at it on. And I talked about yesterday, once we broke this 13.5 level, that we were going to move up to the next resistance very quick. Again, when we're in between levels, we usually do, but it's specific to the levels in which price movement is very quick. This is one of those cases. We didn't do it intraday, but here we are. Pre-market, we did it. We're up almost at 14.5 now. That's 4% pre-market on this ticker. That's a ton. You don't do that. You do not put this many points on this chart. That just does not happen. And now here's where we start to get in. Things start to get interesting because we're coming into some completely new areas of supply we haven't touched since this is 2015. So we have not touched these levels since 2015. How much these matter? It's anyone's guess. I find it very unlikely that any of this really causes much resistance. I've seen in some charts that it will. I don't think that this is such an area that you would have supply out there that would cause selling and cause a stop of momentum. I think everything will be of a switching from this sort of EV and significant growth in the future sort of situation to it's right now that they can gain from it, and it's value oriented. And what we've seen with the value tickers is that once they've gone past their sort of retracement point of the February high of 2020, they've just continued on whatever trend they are, and they don't really care about supply. It's all trend related. I would see something similar here happening. So maybe coming into this trend and just hanging out on this trend line, maybe this trend line is converted over here somewhere, right? Something along these lines. So I would say there's really nothing stopping this here. This is obviously you gotta take this money home at some point. I'm gonna probably take it home as soon as this opens. And again, transition. You want to stay in the position, but you have to think about your exponential again with your contracts. In this situation, you're at a delta of 1. There is no more exponential. You're gaining 1-to-1 with the share price. That's just like buying shares. So take the money home, right? Take profit, and look to re-enter. If we could get an exit right here, right? If we open right here at this, it's 1443, and then price pulls down, right? If we enter here at the level, or excuse me, at where we are, and then we pull into the level, and we can buy on that as support, that would be honestly, it would be just too easy there. But that's what we want to look for. Open, maybe that few minutes of take profit, right? Maybe it's an hour of take profit. We'll be patient to then re-enter new contracts And again, similar situation when the candles pulled back into support over here. That was another buy area. Now, it was a little early in the game to go buy new contracts when we were already in a position, right? We talked about that. And so this is going to be an area that we're looking for. You don't have to do that. You don't have to transition positions. You can continue just to push it on the 1-to-1. You've already gotten your big exponential. You can't really lose anything there. You're only going to lose 1-to-1 as well, right? So your downside is completely protected. But it was a very nice trade. And again, I think it's something that's very important to notice how we're able to jump on something very, in just a moment. As soon as you see something with price, you don't use any other ideas or anything like that. You just use the price and take it, and that's it, right? Pot stocks continue this morning. Again, retail yesterday had a quite the day. AMC, GME all up significantly yesterday, 2 days in a row, right? Pre-market on the meme stocks, they were a little all over the place. Obviously, taking some profit from massive days yesterday. Things like BB are up, and so we've seen this chart is kind of God knows where in terms of the spectrum because it lost a lot of the favor comparatively. But this chart's been doing very well. These have they just have sort of a ton of room to run in, and this is again where we've been talking about for a couple weeks now this resurgence of retail traders as they come out of the crypto space. Again, you can see it; it's obvious, right? They're all getting active. Everyone's buying shit, and it's literally shit. Again, just buying whatever price. Don't care about the price, causing momentum, and we see the momentum, right? It's everywhere. And so I did the BBBY, the triple B wire, Bed Bath and Beyond. Added this chart in here. Now I didn't put like a crazy target on here or anything. Just in this range here is pretty clear, and this is very similar to the BB chart in that there's really not the same movement as the others, and it's at a point where you're just starting momentum. Actually, you don't actually even have sort of the same. It's principally the same, but you don't really have the same factors involved, which is that there was just a ton of quantity out there already, quantity of demand, and you just were waiting to kind of launch off there. This can actually start its own new momentum, sort of like the BB chart, and those just got started. And so these probably have the most to gain now. And it's like if you want to get involved in the meme stocks and play around with retail, then the BB chart and the triple BY chart here are probably the best way to do it. So you're not buying at significant highs on things like AMC, right? If you got in at the AMC low like I did, then you know that you're done. You're probably never gonna look at that chart again. See you later. You know that doesn't really matter. But either way, retail's here. Again, value looking very good. BA, we've talked about this move last Friday, very bullish candle. This move has continued. I think this is great pre-market action, really proven a point. We've had a hard time with sort of this chart and with this sector a little bit, specifically around this area coming into May, where we actually sort of, I don't know, we had some weakness that just didn't exist in the overall market, but existed here. And again, we had pullbacks on the market, but these charts kind of really showed weakness. GE, for instance, right? The aerospace and defense sector in general. And so this move coming out of the breakout is nice that we got a very clear sort of break. That there's no questions, right? We had a candle back here at the beginning of May where it seems like you're breaking out, and then that's it, right? You get gap down, and it doesn't really matter. This is very nice pre-market action, almost 3% so far, and so keeping these charts in mind, you don't forget about the blue chips because again, they're kind of boring. Whatever, these charts matter, right? They do matter. They're coming out of consolidations that are very long. Again, sorry for all the lines on the chart here, but these charts are coming. These charts are in a place that massive consolidations are being just broken out of, and now there's empty space, just completely empty. That's where you want to be. You want to be in the middle of nowhere, right? Trading through the upside. So, BAGE looking good. Travel continues to look good. Again, we've continued to push this position. We're really looking to push the position out of the highs. So things like AAL, CCL, really taking advantage of these as much as we can. And today might be the day. And again, we have 2 days here, and Fridays generally we've seen some risk being put on this side of things. we're very close, right? We're very close. This is again where if you are in these positions, you do need to take into consideration from where you entered. And then if if a break does happen here, you're going to want new fresh contracts that can take advantage of that very quick move that happens from a breakout, right? This local high is what I'm talking about. If you break from there, you're going to put price on very quickly. I mean, it's just going to jump, right? If your contracts are pretty fresh already, then you're fine, right? You're going to be able to gain through there. You want to take advantage of what you know, which is if a breakout happens, then the points will come. Then get some contracts that are going to pay you for it, right? Get an exponential. There's nothing wrong with taking profit to transition into new positions. Think about it. It again, you risk the chance that if you take profit before a big move to get new contracts, that you don't end up capturing it because you never get to re-enter. That's where when you do that re-entry, sometimes you don't get to wait for a pullback. Sometimes you just have to go put a position on. That's that's where the best thing, which is something that basically none of us can do, is that if you're trading something and let's say it's on a rally like this here, when you're trading this, if you're able to at this moment as this next breakout starts, hold the position that you entered from here and put new contracts on here. So now you've put completely new contracts while holding the old ones. Now you have the ability to take profit on the old ones when you need to, and you're already in the new position. That's very hard to do when our whole dynamic of trading is that the economics of trading is just the capital that we have. Your capital is already in use, right? You already used your cash. You need the profit to be able to go put a new position on. That's sort of the problem. And obviously, if you're able to do it in the former way, then perfect. But again, it's kind of the situation we're all in, is that we don't have the ability to really min max every single damn situation. But things look very bullish. I don't. There's nothing that's going to stop the trend. Nothing will stop the trend. We get the short term volatility, and we need to be aware of it when it comes in, and how to take advantage of dips, how to make sure we're transitioning properly, taking the money home. Right, that's the most important part. Take the money home. If we reach a point of uncertainty, take the money home. We don't understand what's happening, take it. Right, that's it. So let's see what we get today, folks. It looks like it should be a fun day. Again, we get some pretty. Again, there's other numbers out there that we could take a look at, but it's the usual. It's the usual. All right, let's see what we get here. X is coming off. Again, I want to make sure we see sort of what happens in that the metals, specifically with things like steel. Now that China's coming out and looking to sort of regulate some speculation. Little unsure what exactly is happening there. Obviously, the chart looks good on X, the usual setup. I'm gonna let it pass by me this time because again, I'm not sure what the timing is on any of that. If China comes out with new news and then you gap down and then you're like, okay, well, I could have just waited. So keeping away from that area for now. I guess the real question here today is how does the tech companies come up off of the break even here so far? Because again, everything is very value oriented. Look at that gap. Quite the gap there. Continuing to be very bad. Small caps, 70 basis points hanging out. Banks continue the bid. And this is where small caps will also benefit from. Banks continue to move to the upside. On the energy side, very similar move again. That's why I talked about this morning. I want to be careful that we get some of that news of hedge funds putting some people on board seats and causing, some riling of the convert to clean energy, and those are not bad things. It's not a bad thing. There's nothing proposing a discussion is not a bad thing. It's always going to be a better thing, being able to prepare better for the future, right? They're going to continue to make money no matter what they say or do. So that doesn't really matter. So we'll see how that situation develops. Though it's definitely interesting, and it's something that's going to need to be handled. And I'm sure we'll get some government intervention, and the government will somehow alleviate any of the pressure that the big companies would have from entering that space, which is again in total. We get the new proposal from Biden yesterday. In total, those three deals are $6 trillion. $6 trillion means there's nothing that can possibly stop the economy. There's literally nothing that can stop it. What are you gonna do? $6 trillion is ridiculous. Some countries will never make that amount of money. It's just never gonna happen. It's just an insane amount of money, and yeah, I don't even know how you could possibly be bearish on anything into the future, right? Again, there'll be things that happen in the short term that can be volatile, but on the long term perspective, how could you ever bet against what is happening? It's, I mean, I guess if you just sort of turn a blind eye and act like it's some sort of, I don't know, I have literally no idea. I can't even form a bearish opinion. There's almost nothing you could do. You'd have to continue to do the inflation is going to cause like the end of humanity discussion, which is just you're already out of here. You're already lost it at that point. You've completely lost it. Right, nice start. Very nice start. This is where, let me put it on the daily. That right there, you're past the resistance. It looks like, what are we going to do? When we talk all-time highs, we had the stop day yesterday, the bearish candle the day before. I mean, it looks like it's in. Looks like it's in. I do, we talked about it last week that it looks like this week was going to be the all-time high. S&P is 0.5% away. That could be today. That could just be today. Tomorrow is going to be interesting because, again, if we do hit the all-time high, we should be able to put points on, at least that one day, put a lot of points on quickly. I don't think we rally the same way we did last time through it, since we've already put a rally on from below, but it is important. It is important because this is where, when you're looking to put new trades on, you're running out of space up here, right? You are running out of space, and that's why you want to be getting those pullbacks when you can. It becomes very expensive very quickly, especially if you're trading options and now you're buying options that are worth 100 times or 100% more than what they were just a week ago. That's never an easy position to be in, to be buying those. And I mean, this is where retail's great. Retail comes in, they buy everything. They don't care what the price is. Got no clue. Can't even look at the chart. Robinhood doesn't even have charts. Got like lines on the graph. They call them line graphs. Here you go. You want to see some lines? Here you go. How's that? You guys like that? Oof. Imagine doing. Can you do this on intraday? Wow. Could you imagine? This is a 5-minute line chart. Jesus. My heart rate looks like looking at that. Looks like trend lines are a little slow to load right now. Or drawings. Not sure what's going on. Hello? TradingView? Hello? A little slow. I don't see anything too wild yet. Definitely going to be one of those build-ups over the day. Nvidia came out with some pretty good stuff. So looking for the semiconductor space again to continue moves. I mean, the rally that we've come off the low has been very nice. Now it's a question of, are we going to put the trend on that we're seeing everywhere? Is it going to happen? Again, we're at the highs here. And it's on the Nvidia chart, it's very interesting because in terms of your continuation, it's this trend through here or this trend through here. These are all pretty sharp. Everything to the upside is pretty damn sharp. So, this is where you have such a high potential upside that you're pretty much set if you're down as soon as your downside does get protected, which it starts to get protected when you get moves like this that are not sharp to the downside. And every single time you come into the downside, it's very much over multiple days, right? It takes like a week to get pullbacks coming. You don't have this sort of the severity of some of the other charts that as soon as selling comes in, there's a big drop. Nvidia doesn't have long positions being exited, for instance, and that's what you kind of want to see with the semiconductors. That doesn't when it's so supply generated anyway, with the prices being from supply shortages, shouldn't be big selling candles, right? We haven't seen that recently, right? AMD hanging out. See if we'll see how these change again today. Today is very much value oriented, and we have not seen growth really do much of anything here. So hanging out again, not a bad setup, right? It's holding value, not losing value. So it doesn't need to continue to burst through all the time. It's about holding it, continuing the move after there, right? Unless you go Google or Microsoft or Facebook and you just kind of you say see you later. All-time highs on those mega caps. I'm still interested in the retail store space. UA opening on the support here. Basically no movement though so far. All pre-market, as in nothing even happened pre-market, but opened higher. Hard to tell. But again, retail stores have been very interesting. FL has continued off the low, but we've seen a lot of volatility, right? All over the place. Yesterday we had things like Nordstrom coming down. We had pharmaceutical companies or retail stores coming down. Those are parsing some of those losses, hanging out. These are not trades that we can really take from here. It's just kind of we're looking for it, right? If these come, for instance, if RAD comes through the levels here, okay, then that's completely fine. We're back out into the open. There's big levels of resistance through here, right? Big levels of supply. You have to wait for it to come through, or else you're going to get rejected and then lose money for no reason. So it's a very nice start on RAD, though. Again, retail's here. RAD is a meme stock. There's no doubt about it. No doubt about it. See if that's enough to go light that one up. Yeah. UIND has been interesting. I really don't know what to do with this chart. Really don't know. It's just ugly. It's just ugly. I like the move right now, but yeah, I mean, at this point, how do you buy that? Not sure. I like the idea overall, and I think that this space is probably going to get crowded. I think the fake meat space is going to get crowded. I'm just not sure how that price continues to move. It's going to be it could gap anywhere, and there's no way to tell if the people that are buying down here are just looking to get a quick buck, or if they're long-term sort of idealists that want to hold it for. I mean, who knows, right? We just saw the same thing out play, and everyone sold it. So who knows, right? Who knows? But it looks good. We'll keep an eye on it. I think I don't really want to put it in the COVID winner category because it had, a lot of swings all over the place. It did not have that consistent trend that we saw across the board. It was very, much one and done every time. So keeping that, keep it in view. Yep. Keep it here. Continuing the move. Bad. Nice bid day. A nice bid day. Really see much coming out right now. I guess there is one other thing that we can actually mention here. So Tesla proposed the idea. So again, one of the big things with the chip shortage that's happening right now, the semiconductor shortage, is that automobile companies are sort of they're just the massive buyer of that, and they've basically have not been able to produce as much because of the shortage, right? There's lower volumes because of it. Tesla came out and said that one, that they are looking to buy more. They're going to end up buying more. But then they had the proposal to buy an entire like semiconductor plant and just build them like within, vertically integrate it, which I mean, it already makes sense, and that's what Apple's doing, right? Apple is making their own chips. That's sort of the they obviously buy, they still buy as well, but they are making their own, and so it does make sense. But when I was, reading it, even a lot of the arguments against it were it's going to cost a lot, and Tesla doesn't really have the money that the other mega caps have. It's just a mega cap because of, again, speculation, not from true value. They barely profit, right? They barely profit. Yes, they spend a lot, and so they can sort of uh, form and the way in which they have costs. But I mean, let's be honest, it's a little crazy to think, but it does make things interesting when you put into perspective that if Tesla's thinking about buying semiconductor plants or companies that produce semiconductors, then what about the other big boys that do have money, right? Tesla's broke in a profit standpoint. They have a lot of cash, right? But it's nowhere close to the hundreds of billions that the other large cap to mega cap companies have, right? When you're in a weird global shortage sort of situation, it may make sense just to buy the whole damn company, right? Just buy the whole damn thing. Now you're all set. Use it all for yourself. That's going to be met with a lot of regulation problems, probably a lot of no's from Congress. But it is something to keep in mind that it's it's a possibility, and it's at least a possibility when you look at some of like the Taiwanese companies, things like ESM, right? Is that if Tesla is going to be buying up a majority of those contracts to supply themselves, then you start to get those bidding wars where companies going to be willing to buy out the rest of the market so that they can get the chips, right? That does lead to higher prices, which is what I've been talking about, which is a supply shortage will cause higher prices, which inherently will cause the equity prices to go up on that side. We haven't seen that yet because that's in the futures price. It would be in a future pricing. You would be able to go look at options and see those kind of bets being placed, but it's not enough to move things yet. That's again when we start to get closer to those contract expirations and whether or not they have intrinsic value. Well, then you'd get a gamma move or something. So again, options would not be. That would be the area that you'd be betting on it. Otherwise, the shares being bought is obviously not. It's not happening. We don't see it actually happening in the semi space that people are specifically buying because of the shortage idea. Because again, it would have continued over here and not came down in such a sort of average fashion with the Nasdaq. So, an overall tag. But it is interesting that those things came out. I think it's a little, maybe, it's probably a purposeful move. Tesla knows that they're not going to go buy a plant or something, a company. Like, they don't, they don't have the ability to really do that. They don't have the money. So I'll say that's when, Apple just buys everything. And I mean, you're talking about some of these companies could just buy an entire country, buy the whole damn thing. Hey, listen, guys, you're just gonna make chips from now on, okay? Good job, guys. I mean, everyone's vertically integrated. I mean, that Amazon deal's still cracking me up. They bought MGM, and then you know what happened? Like a few years ago, we were talking about was how, or it was really when they bought Whole Foods. Was that all right? Amazon is just a conglomerate. How far are we going to let this go? We're letting all these big companies just buy up all the competition every single year. What are we going to do? And everyone's like, "Oh, we should do something about that." This is just crazy. We're letting these tech companies get so big. They're How much bigger are they now compared to like 5 years ago? They are 3 to 4 times larger. Apple doubled its value in 3 months after COVID, from past the all-time high, doubled. Went from 1 trillion to 2 trillion during COVID. It was shit. They just keep getting bigger. They buy everything, consume, consume, consume. Um, for Google, obviously, it's just it's just gonna continue. That's the thing. There's nothing you can do. East India Trading Company, am I right? And you're definitely not gonna get the days of breaking up Standard Oil are over. That will not happen again. We've already tried. We literally already tried. When they did that, right, broke up Standard Oil, and you know, we realized that that was a problem. Uh, the time has come and passed for the tech companies. They're not even tech companies anymore. I went to Bezos High School. Damn, pretty cool. Just think, Jeff Bezos is gonna be worth $1 trillion in less than 10 years. Just think about that for a minute. $1 trillion, less than 10 years. The trend doesn't even need to continue. That's the funniest thing. We don't even need to continue the trend. We could slow down. We could take a few years off. Take a few years off, do nothing. Did he buy it? I don't think he's been back since he graduated. Probably not. And everyone's going, damn, I wish, or yeah, everyone's like, damn, really wish I took advantage of my time when I had it. Jeff Bezos is an interesting guy. Some of those hit pieces that came out, I read some of those, and like, listen, if you're fucking rich, obviously you try to cover everything up, and you'll pay any price to go cover up all the negative attention and shit like that. Uh, but he definitely does have a different demeanor compared to the rest. Like, everyone talks about how Elon is like the bad boy. Jeff Bezos is definitely the bad boy of the bunch. Elon's a fucking joke. He's a memer. He's not really, it's not really like he's I don't know. He's not really tough. Bezos that different energy. Dude went from looking like a I don't know. He had the Bill Gates nerdy look to going bald, getting jacked. Probably gonna live forever. Actually, that's who Bezos reminds me of. Michael Jordan. Yeah, gold things, honestly. Yeah. There you go. There's your difference is LeBron James and Michael Jordan. LeBron is like LeBron is all about making sure to, he does all these things for charity. Like it's insane how much money he's already spent, but he does like all the different programs for school and all of those different things. Um, like for high schools and setting up things for college and does all the things for like political standing out, talking all the time. And then compared to Jordan, Jordan just shits on everyone, complete arrogant asshole because he knows he's the best. And then you have things like Bill Gates is like very much about his foundation. Now we've heard that he was getting a little side piece at the office, but he still does that. And then you get Bezos, who's just that guy is just he don't give a shit. He's like, you know what? Fuck Amazon. I'm gonna step down. I'm done. Bezos was literally like this year, COVID happened, and then he was like, you know what? Fuck this, dude. You guys run it. What do I gotta do? I mean, fucking, I get to keep all my. Hold on a second. I get to keep all my money and all my shares, and I don't have to fucking work. Perfect. I don't blame him. That's you know what that is. I think you guys probably thought about this too. It is the strangest thing that because this is like this. There's like the idea of entrepreneuring. This is the fucking big boys are completely different. Your Elons, Bezos, Gates, Zuckerbergs, like it's completely different. The amount of money they have. Why do they keep doing it? Why do they keep working? What's the point? Like there's someone else that can do it better. They came up with the idea. There's someone else that can do it better, like realistically. But they keep doing it, right? It's always that's always such a weird thing to think about is that you are the richest man in the world and you still want to work. It's just sort of like in our nature, I guess. When you're at the top, you're bored. Yeah. Yeah. There's only, I mean, I understand the money part. Like, there's only so much you can buy. That's where, like, it's not going to do anything. You can own everything. It's not going to do anything for you. It's going to do something. I understand, like, the space race thing. Like, it makes sense. That's a fun project. Just build fucking rockets and do shit. Like, I mean, why not? Who fucking cares? It costs nothing. Literally costs nothing. They just got to go do it. Hire some hard. You get to hire people, give them jobs, get to do something cool. You don't really have to work. I mean, Elon keeps working for whatever reason, but he's like actually the hands-on guy. Why Zuckerberg? Like Zuckerberg, my favorite thing was back when Congress did try to break up Facebook was the way in which they have everything written in sort of the Facebook. I don't even know what you call it. The way in which the shares work with Facebook is that Zuckerberg owns all of it. There is no hostile takeover. There's literally nothing that can happen that removes Zuck from those shares. He owns the majority. It's like fucking 99%, right? And the way it works is that it's set up like a dynasty. It's dynastic. It's literally set up as a dynasty so that when he dies, it goes to his children. It goes to his eldest. It's literally a feudal system that Facebook is set up as. And so then Congress, that happened because Congress tried to stop Facebook obviously from all the different takeovers that I was doing. And then that's when Zuck was able to set that up. and cause it to be this like very weird feudal system where it's dynastic and very weird, very weird. So his kid will be the primary shareholder and in control. Like, I don't mean just shareholder, I mean fucking leading, steering the ship, which is very strange. Just very strange. That's just called playing. You've got nothing better to do. Generational wealth. Yikes. Generational wealth of $100 billion. That's even more yikes. Yeah, GE continues. Those moves with BA and GE are very nice. Continuing. Look at that shit. See ya. See ya. See ya. When you get it, you get it. When you get it, you get it. What else can we say? What else can we say? Ford, 6%. GM, 4.5%. Chart is a little different, but it basically has the exact same properties as Ford. And I don't even know if I need to say it, but we already changed Ford and GM to the EV component back in here. Pretty much the same. Chart is basically the exact same. Might as well just trade the F chart because it's leading it. Everything on the auto side. Auto parts is climbing right now as well. Nice bullish day, folks. Nice bullish day. Business as usual over here. Business as usual. Nice doji on the average. See, you get this. You get this sideways trading on the average, and then again, due to mega caps being sort of sideways right now. All value all the time. Banks over 1%. We're still sitting at that resistance as well. This is an interesting sort of spot again because it's a question of how do you get out of the high here so you can get back onto a trend to the upside. Energy is a little different than that because it's a little bit lower. So now you're just trying to get out of this supply. And there's all kinds of different things going on there in terms of talks, but yup, a nice blue chipper day. X is coming up through here. Looks pretty good in there. We're not seeing retail do much of anything yet. Okay, well, we just saw a big tick from red. Looks like it might get through the level. Might play around with that a little bit if it breaks that 18.5. Otherwise, not much here. Not much. Again, it's just everything that we're already in. So it's, that's where these are the kind of days you like. Already in positions, just watching them. Hanging out. Much else changing. A nice move, though. Very nice moves. I want to look at some of the social side. Nothing here. Viacom, that's probably already enough to continue the move here. The higher highs, definitely setting it in. That's going to be a very interesting trade or chart. Seeing anything else move. I saw that tick. Very interesting. I have a lot at the break-even area. Demand is very much getting funneled right now. We saw it get funneled yesterday on retail tickers, and then today it's getting funneled on our more auto side and value through it's really through like that. What sector would you want to call that? How do we combine automobiles and sort of the? I'll just say blue chips. We'll just say blue chips. Blue chip side. Just the blue chips moving. AL completely break even, but to the upside. Dow Jones. Such a it's so silly that the Dow is just so stupid. The way in which it's the components and in the way in which it's formed, and it's just so silly. It's just the thing, the reason why we keep using the Dow, right? The other the other indices are so much better, right? They have so many more bits and pieces, and they really are a better overall sort of ratio of the market compared to the Dow. Like the Dow is just it's the oldest, and it's important. I think a lot of people there's like a big crowd that wants to remove the Dow Jones because it's just fucking outdated. Like it doesn't even really make sense to have it. It doesn't really represent the way in which the market operates today. But what I think is important, and the why I use like the nightly news idea and stuff, and the reason why when you watch the news, they'll talk about the Dow on the nightly news. That's what they'll talk about. They'll talk about the S&P too, but they usually will say, "Here's the Dow." And even when you're at an institution, you'll say, "Oh, the Dow is up this many points. The Dow is down this many points." And it's tradition. It's a traditional sort of it, it's a traditional sort of phenomenon in humans that we have across all kinds of different facets of life, right? That we like to be traditional, and we like to go back on something we're familiar with, and that we can always use sort of as the denomination, right? It's like it's the common denominator across everything. Even though it doesn't really represent the entire market, it's pretty silly the way the ratio works. It's just something that we can all sort of use all the time, right? Yeah, we could all use the S&P, but the Dow's been around for a long time, right? And it's just sort of the outspoken sort of thing that we all sort of agree with. So, and I think even the way we've seen it perform and the way it works, if it was really so outdated and it kind of sucked, then you wouldn't see it look like this. I know it's just the companies within it that make the move, and you got Apple and Microsoft in there really just pushing it. But at the end of the day, it does work. It does work. And even though we're a little bloated on the index side and the ETF side, I don't think there's any reason to get rid of the oldest sort of the founding father, if you will, of indices. It doesn't really make sense to do it. Oh, by the way, folks, if you didn't know, this is going to be a first. TradingView introduced a new advanced view chart with whatever tickers are in your watch list. Shows the distribution of sectors, what kind of ticker it is, the information, upcoming earnings, everything you could want in one page. And it's just on the same page. Up here, the little dots on your watch list, advanced view at the top. Boom, there it is. Look at that distribution. This is the 500 most recent tickers. This is since March. So that's since March 1st. Or is it February 1st? That's since March 1st, these 500 tickers. That's a pretty even distribution. That's a pretty damn even distribution. That's what we got. 77% tickers and 16% ETFs. Pretty damn good. 19 different sectors we were attacking. 15. Well, I mean, damn. I think it's a pretty cool feature because I think for probably a lot of you, it kind of gets lost in translation what exactly. I mean, you know what individual tickers are and what like what sector they're in, but when we look at so much, sometimes we forget sort of why we're looking at so much, and then why we're specifically looking at sectors, and then what compromises them and what tickers within the sectors we're looking at, but really how we're trying to look at everything, and not just 100 different tech tickers. We're trying to look at tickers within every sector and visualize it. And I think this is a kind of cool page that you can see that, it is very much an even distribution over what we're looking at. And it's it's good to always make sure you're visualizing what exactly it is the hell you're looking at, because you never really know. I mean, you know, but I do think it's pretty good. This is pretty helpful. Pretty helpful, especially on the earnings end, because I'm generally terrible at knowing my earnings because I don't really care. Uh, but it still is important. Yeah, that's that. That's a pretty cool feature. They're introducing some cool things actually. Um, that I'll have to check out. They have some Pine script things that I used to do things in R in the past for my old job. Um, but I haven't really done much of anything on the trading side because we're so short term and we don't really need big data to confirm anything. There are some ideas though I'd like to try out, and I'm not much for back testing. I'm for this is where you have these people that have never traded before trying to back test things, and then they go, "Look, my strategy works." But you're literally just fitting the data. You're drawing a line through the data, and then you're saying that's the strategy that works, and then you try to trade with it, and then you make no money, right? You have to be trading first and use that as your test. But there are some ideas that it's in it's a way to remove bad sort of habits, is that you can backtest data and show that it's not a good thing, right? And this is where you can like have a bias, and then how do you remove the bias? A lot of times you can use data to remove the bias. That's like a big thing. If somebody that work at a company, the biggest thing is just proving the things that suck. You cut the bullshit, you start to save money, right? The same thing with trading. You start to cut out the bad habits, then all of a sudden you're doing well. You may not be great, but you'll cut out the shit, right? I would like to use they have these things with Pine scripts that you can actually do some interesting things, and I could easily with a lot of the things I talked to you guys about, and the way I just can quantitatively form some of the qualitative ideas I have of trading on how we enter and exit and how we transition. You can enter that into the Pine script code on TradingView. I could it doesn't create like um, like a program to trade or something for you, but you can enter those variables in sort of the strategy and put it into code, and then backtest it with everything, and see what exactly was going well or not based on that. Again, it won't be perfect because a lot of the times my answer is it depends. And I just kind of completely make it up on the spot of what we're doing, and those are usually the trades that do the best because it's more that's an intuition that a computer will never have. It's to be able to change its mind, right? It can't rewrite its code, and so that will always risk management will always be a human factor because it's humans trading, right? It's all behavioral. If it was just numbers, X's and O's, then of course computers would easily outtrade humans. But it's the fact that it's humans trading right now, right? The majority are still human behavior and how we get fear and have FOMO, all those things, right? And really, the trading is all human anyway. So, uh, in terms of the big ideas of why would you buy this? Well, because the boss said so. We have to buy it. The trader is just executing what someone else wants, right? They're just trying to get the best price. But I would like to try some of that because they've introduced a ton of new stuff on that. That makes it a little bit easier. Don't have to write too much code. Maybe that's what all the truckers are going to do, right? When all the truckers lose their job, all the millions of them from self-driving, they can become trading view uh, coders. Or maybe they'll just become traders. I would love that. You know what? I'm gonna start creating some advertisements right now. Hey, truckers, put your money in the market. Become a trader. Use this Robinhood app. Here's my link. Oh, you lost all your money? Damn. That sucks. Hmm. Very interesting day. All pre-market dependent. Nothing really happening so far. See if this bid comes through and breaks the high. Where are we at? We're at 10:15. 45 minutes. Can't tell if it's gonna be a slow day or not yet. I know we're at the exact same price we opened at, but we have so many tickers that put points on instantly. Again. We had good numbers. Probably a melt up lunch. I think those orders are probably continuing to go through. And that's going to cause the demand to just outweigh supply during lunch. If the orders continue. We're going to put more points on. Whether it's put the bid on through here through the high right now, which it's hard to tell. It looks like we're trying to do it right now. It's just very slow looking. And that might be because the orders are more passive and being put over sort of longer periods of time, and it's just that would cause the melt as things slow down during lunch. The volume goes down, but the demand stays the exact same. I think that's where we're headed. In terms of the Nasdaq, again, most of mega caps are hanging out, which is why the average looks the way it does. And so those would definitely be melt up sort of situations. This trend is continuing. The trend is continuing. This is all pre-market action. Trend is continuing here. We're right here at resistance, so we're already kind of working through some supply. Things could definitely be interesting. And I'm gonna keep proposing the gap situation where we're in a very we're in the territory where there's a very high probability you gap over levels, which we've seen on a ton of charts already this week, right? We just now did it with some of the tickers we were just looking at, like Ford again, right? Gapping right over the resistance as if it's nothing. A lot of charts doing that. It's not out of the woods for the average to do it again, which is why we're continuing to, look to be aggressive when we can. What am I looking at here? All right, put it on the SPY. Let's put it on the 5-minute. Put on the 5-minute and see if we get through this high. Otherwise, I think if we don't break the high here, then yeah, we're gonna be pretty chill until lunch and get melt. Which is definitely a kind of day I like. I like that. There is nothing interesting to read today. Holy. Hmm. Here you go. Here's an absolutely very well thought out title. Big oil's terrible, horrible, no good, very bad day. I guess for the brainiacs that only think about dirty oil, yeah, those that just love oil, right? They just love the taste of it. But in terms of company perspective and growing into the future, that was not a bad day. Jesus, what are we doing here? Like, I want clean energy as much as the next guy, but we gotta like stick it to him. It's not gonna be bad for them. It's gonna be good. Going to be good. REITs, REITs continue, which again, you're not gonna see some flashy big number. It's not gonna be like a 5% gain, but they consistently are doing a percent or so a day. They just keep climbing and climbing and climbing. That's what you want. They are the part of the defensive value stocks that completely overlooked. Completely overlooked. Hang on, where are we here? My old DVDs. Let's see. Show me the dividend. Show me what we got here. Just like the rest. Just like the rest. Looks very good. Looks like the financial sector. My old SPY dividend. Because it's basically just banks. Banks, energy. Looks good. When do I get paid my next dividend? Where is it? Events, dividends. When is it going to be? So it was 22nd of March, December 21st. It's coming up. Coming up. June. Pay me my, oof, 4.56 on 500. Ooh, somebody do the math. Can't wait to get that. Paid 50% tax on it. Or wait, I think we get dividend exemptions. Somebody call the accountant. How much do we get? It's like, I don't know what the actual number is. You get some sort of exemption at some fucking percent level. I actually don't know what it is, but it's definitely better than the usual amount that you get from short-term trades. That's for damn sure. Damn, gonna be almost 23,000 for that dividend. Boom. So minus divided in half. Maybe add a few $100 on top of that. That's every 3 months, or yeah, it's every 3 months. So 3.5. Give me them. Give me them. Small caps continue their move. Hunting the trend line in the highs. All-time high is 4% away, which is not that far on small caps. The big D's do continue. Transitioned yesterday, as we talked about. Now we're heading to the old coveted 32.69er. Nice. Getting there very quick, which is why I wanted to make sure that we went into it a little bit, prepared. We're gonna probably boink ourselves, little bonk on that resistance, and it's really hard to tell how quick that would be and whether you could actually do. It's just not the place that I'd want to be selling in the money contracts. That's for sure. No one's buying in the money contracts when things are coming down like that. It's not gonna happen. Um, yes, you can market maker it, but that's gonna take fucking forever. So this is looking very good. We're at 5% now. I would love for that thing to blow right through there because again, we got new exponential on, and put this trend on. The whole point, right? The whole point. And it's been a lot more level, right? The trend line through here is just very nice. Very nice. And so we're breaking out of it, right? We talked about the trend line on the top. Breaking out of it, and we're gonna get to the resistance, and that's where all the questions are. If you break through that, oh, see ya. See ya. Fun one. I like that one. The triple D. I like the ticker name. It's a good area in terms of a sector for us. Let's see. Looks like we're about to get some more lines on our LUMN chart. A couple more lines, cool, yeah. Put a couple more lines on there, even though we get a pretty high target up here. On the trend. Watching that one says spoon. Well, tell you what, you watch a rocket go up into the air, it's gonna be real hard to get back on that rocket. Unless you're waiting for it to come back down. I think we can say that about everything, right? We look at the market, it's like, when do we buy? Guess when it comes back down. You just come down already? The shitty thing though, we have to buy these like tiny dips, which why I always laugh that it's like 2%. I'm like, all right. I guess I'm gonna get a 2% gain on the underlying. Great, can't wait. Where's my 10% correction that the boys have been telling us that's gonna happen for fucking ever now? Where is it? Where is the 10% correction? How far would the 10% bring us down right now? Holy. That would be the 10% correction. You think that's gonna happen? If that happened, I would literally rope myself. Hashtag rope or $ rope right there. If that happened, I'm out of here. I think people would be jumping out of buildings. Everything we thought we knew was a lie. The GameStop cultists were right all along. The GameStop was the battleground, and everything was tied into it. Once GameStop went to 1,000, everything else went to 0. That was the start. My name is John Connor. Where is the old gamer? 1.3, getting there. AMC just a little bit better, right? Just a little bit better. I can't believe I'm still in this position, by the way. I'm not even sad that I took half of it right there. I'm not even sad because I've diamond hands my last half, which is all that matters. I'm a pussy and took half of it right there, but this last half, that's 150% on the underlying. I'll tell you what, the pricing is really weird looking. I'll tell you. I already told you yesterday. Add a couple zeros to the 100. Now it's looking a little. Now again, it's 1-to-1. So you just put another 16% on, which is the shittiest part. But it's already up 10,000%. So who cares? Oh God, it's squeezed out of our mind. I fucking love this chart. I'm so happy. I'm so happy. So happy. This is when you sniff them, right? You sniff the retail coming, and you know exactly what they're gonna do. You just know what they're gonna do. What's the best part is that there are some of them out there that have been holding, and they actually were right. They were actually right. They were actually right, and I think that's scary. That there's someone that bought it this high in like March at like 15, and now they're right. They fucking held all the way here. Oh God. Or the fucking astronauts that bought up here at the most disgusting candle anyone's ever seen known to man. The 300% gap up. I died when that happened. I fucking died. If anyone remembers, we were in that trade. And we all fucking lost our mind. And then what happened? It fucking whipsawed. I just wish we could go back and live this whole month again. I just wish. I fucking wish. And then it whipsawed. By the way, it whipsawed lower than that. But this here, it was 50% whipsaw in 30 fucking minutes. The S&P will never go down 50% in 30 minutes, by the way. So S&P's a little bit better, but oh my God, I love this. Oh God. Some of the things we've gotten here recently, again, it makes it all worth it. You're in your little slow value trades. You just put enough risk on to go get paid. It doesn't take much, which is the best part, because I'm okay with parting away with, 1%. Part away with 1%, get rid of it. But when that 1% then turns into quite a bit more, worth it. It's worth it. You only need one of those. You only need one of those. By the way, where are we going now? How much further to the all-time? All-time high is only 55 now. It's the ratio starts to increase. Let's log it. It's so funny how good the chart actually looks. It's kind of creepy. It's really creepy. It's a very good looking chart. Looks great. Looks perfect. Exactly kind of chart you'd want to trade to the upside, but oof. The reasoning. Crazy. Really, really something. Where did the bubbles go? There he goes. He does continue here. Let's see. Let's see. Ah, I need to. We're missing some trend line in here. This one? Maybe it's this one right here. Let's end that. I think we have another resistance coming up here. That's that's probably it. That's probably it right there. Let's see. So this is where we're going today. That is 1428 today. 1427. How many lines on my chart? Where does that go? Terrible trend line, but what about with this? We've seen this on some chart. Oh, okay. Do this. Kind of. But sharper. Oh, see? There you go. That is it. So you get your trend line through here. And then the large macro trend line. Large macro trend line. That one with this one. Let's turn them to a different color. How about like, I don't fucking know. Red? The macro trend line, and then with the more recent longer term trend line from the end of last year that comes through and does cause resistance on a lot of different lines there. Converge right to where we're going. You ever just watch price go to converging trend line supply levels? Just two resistance lines converging and then price goes right there. Only a million times. Price is coming to a level here. Can we please just take the... I can't look at all the bubbles. Very interesting. Forward continues. Now this situation, that's probably going to the trend line. And there's not really, I mean, this is obviously going to this trend line. Oh, that's not what we meant. Um, I mean, I have no fucking clue. It's pretty sharp no matter what. It's gonna be tough trades. Or tough exits. Transitions, everything. So we transitioned from from the open, but how do you go from that? Fucking not clear. Again, the power of transitioning, it cannot be overlooked. It's insane. If I was in the same contracts, I would have only added 6.5% to my contracts. Instead, I get to take all the profit home, and the new contracts are up well over 6.5%. Right? It's it just it's so I don't even know. It has to be done. If if you've got it, you're in that spot and you're in that groove and it's working, you gotta press it. Even I mean, taking profit is taking all the risk off. Obviously, re-entering for new risky contracts at the fucking high here is is a risk, but when it's locked in like that, you gotta do it because whew. Even though you know, even even though when you transition, you end up becoming the one that's buying from the one that's trying to sell it to everyone that's buying up here. It's a different case. It's a different case than if you're in something and then you sell it because everyone buys on momentum. This is a transition that you're trying to get a better exponential, and the timing it depends. So, while while we everything else hanging out, looks like it's coming off the lows a little bit. S&P's picking up pace. Nasdaq's picking up pace. Dow's out of its mind, looking like a I have no idea what it's doing there, but it's up high. Small caps continue. Everything getting going. Definitely looking like a melt lunch. 1040. Getting there. Here you go. Here's your retail volatility. All right, BBY coming down into the trend line, bouncing. There's your pickup. There's your pickup right there. Gonna be a silly looking candle too. Oh boy. The daily candle won't put it into perspective. The bounce you're getting here coming back. I do miss the entertainment and the fun of trading with retail doing whatever the hell it is that we are doing. Yeah, that's gonna be a fun one. Red did get rejected, which is why again talked about you gotta wait for those levels to be broken. SPY, we're about to test that high from the open bid, which is what we're really looking for to start off possibly this melt up lunch here, and or a pretty big rally in terms of the volatility again is picking up, and that picks up the speed, which is again based on the spread being a little bit wider. Things get going a little bit, momentum gets going, and we're not really in the gamma territory, so nothing like that, but FOMO, momentum trading. Ford just keeps blowing by. See ya. See you later. See you later. Really love the look of that chart. Just, trying to figure out what exactly we're doing from here. I mean, that's a it'll be 21. Damn. Damn. 21. Yeah. Holy moly. Holy moly. I'm gonna put this outline on here as well. Put the outline here just in case this is what really going on here. This the big channel. In case we get bonked up here. Oof. I mean, that makes a little bit more sense that we're trading in between a channel from low to the high, from the high to the low, low to the high. I'm gonna keep that in mind. Tomorrow's gonna be very finicky with this chart. Want to make sure. I mean, I don't really need to do anything now because I already got it, but I do. There's probably going to be some things that we can press for advantages again, and I don't want to let up here. It's very similar to like the GE idea here. Very important that if we see some intraday movement that signals that there's price broke through a level and then is testing it to then sort of go to the upside again, that we're looking to pull the trigger again and press it. Transitions. We're getting heated now, so we are getting the. Let me see this. Yeah, we're getting through the high. Does look like we're doing it here. Let's go. Really waiting on mega caps again to get going, to pull the whole thing up, get the momentum really going. We want to be very careful here. Very careful. You got to make sure you're taking the money home. It's gonna take. This is again. It's gonna take one day for this shit to just gap down on you. I don't mean like as in that needs to cause a worry for the market, but in terms of if something put a lot of points on, right? If something puts like 10% on in a day or something like that, you got to be ready for 5% to come off the next day, right? Obviously, of course. And so as you're adding risk at the highs, especially if you're transitioning, it's very important that your transition is not adding more risk to your position creating the possibility that you actually lose the gain that you just took home, right? From the next day or something. So sometimes there's like a point at which you have to stop, right? So some charts will need to be, you take it home and you don't re-enter it. It's that sort of intuitive risk calculation that you go, okay, I can't buy more again here. And so that's when you probably didn't you probably don't transition. You take some home and let the rest ride through. And you just let it watch. You watch it like my AMC, right? Like I took half of it, hit the resistance, took half, and I've just watched the rest, having some fun. Yeah, I mean, when you start to do the number, like none of this really matters up here. This is all 1-to-1. So once you get here, it doesn't really matter. And so some of the other positions, if you didn't transition them, then it doesn't really matter then. That's what's nice. You kind of, you don't have to worry about it coming down a little bit. You're just losing 1-to-1, so who cares? It's just fun to kind of just sit there, hang out. Wouldn't buy more up there. That'd be insane. Even if it goes up another 100%, it'd be crazy to buy right there. Blue chipped out of our mind. And this BBBY chart. Here we go. Whoa. How much is that right there? 33% off the low. Looks like a pretty clear bonk there. That's 1 cent of a difference to the trend line. 1 cent. So pretty clear. That's 1 cent. 24.25. Yeah. Now we hang out. We wait. There's your volatile take profits from retail. What is the start of that candle? There you go. There's your there's some. If you ever wonder what some retail take profit is, there you go. Because you haven't seen one of those in a while. You only see it when they're around. That wacky looking, what are we doing here candle? And then it goes away. Those weird those down ass candles. Yeah, that's your nice retail candle right there. We have any other ones from recent here? We have it on some of the charts. We have some of those long lower shadows, right? Because then they buy back in. They go, oh shit, hold on, we're going back. Let me get back in. They're everywhere. GM swinging back down. Swing downs are going to be important to see how much comes off. Again, we put things that have put a lot of points on can certainly lose quite a bit of points from the high, and they still have a lot of points on. So got to be watching that. Again, the added volatility is going to cause moves everywhere, which is why it's been so nice for the upside. This is why we're taking the money home when we can. Take the money home when you can. Don't watch it go down. Don't lose it. Let someone else take the loss. Let someone else take it. If you're up, when you're up so much, you gotta do it. I like this candle a lot on the Nasdaq. I don't mind. I think specifically the Nasdaq is the one that needs the volatility right now because it needs the volatility to get to the upside. It's going to need those wide spreads and sort of retail buys to come through to get going. Problem is that it is all options based, but it'll eventually make the move. Oh, just we're just erasing everything. Going down, instantly up. Love these sideways trading days. Holy moly. So funny that these are the days that you just trade flat on the average and you just put so many points on these other positions. Just demand just funnels. Somehow creating just bottlenecks everywhere. We're oof. When we talk about the low volume, besides from Monday, I think we found some. It's on the individual tickers again. That's the thing that's noteworthy. On Not on the average. Average volume is just average right now. But we're already at the average daily volume, and we're only an hour and a half in here. On these tickers that are putting points on. A lot. A lot. Like GE is moving through. Uh-oh, we're about to put another one on. They're gonna get through. Close. Can't see it there. There it goes. All right, there's the tick right on the upper trend line. Hard to see probably, but let's fucking go. Is that the rejection? Is that the confirmation? That's the confirmation. That is the trend line. Ford's coming up to its trend line. Another 1.75. Are we gonna burst through this thing or what? Rejection or gone? Already done 7% on these tickers. Are we gonna be able to really do more? We're gonna double these candles up? It's gonna be one of those days. Because if you break through some of these resistances, then you probably start to double up these candles. It's fucking scary to think about. Little scary to think about. Now, BA did not make it through. Waiting for that to come back. Nice start on Under Armour today. Again, just taking advantage of what we saw with retail stores yesterday. Just trying to find the one that was at a low, get the swing to the up. That was pretty straightforward. Fucking sat there for 15 minutes, let us buy. Facebook is all-time high, which is, again, different than the rest of the mega caps. Mega caps are not doing so. Facebook is. And was on off the rejection, a little bit lower. Apple, break even. Microsoft, hanging out. Very similar move across those. Google trying to follow Facebook, break even, but very close to all-time high. Chart is just insane. It's crazy amount of buying. I mean, this chart is so funny to look at. Look at that shit. What is that? That's just, you gotta love that. I mean, it's this, but gotta love it. Let's see how retail's doing over here. Wow, what is that? That's quite the intraday consolidation right there. What are those, daily candles? Know what to say. The Dow components going on here. Up 40 basis points, but down intraday. That doesn't even make sense. I'm actually not even sure how that move adds up, but apparently it does. Um, let's see, maybe no. Index has the same thing. How did we get here? How did this happen? It's up almost 0.5%, but it lost. It lost almost 0.5%. How in the world did that happen? Where? It's up 0.5%, but lost 0.5% from its high. How do we do that? Ooh. Okay, maybe some of these. Microsoft's got. These are some. Holy. Look at the size of those candles on Microsoft. Okay. So where? Okay, Walmart looks like that. What is AXP? PRV? JPM? Oh, okay. Thanks. Thanks did it. Gotcha. Gotcha. Now I see. Just saw the value, didn't see the move. All right, how's Bitcoin doing with all this? Hanging out. Testing the trend line again. Some funny candles. Funny, funny. F about to hit 15. Everything else is basically now trading them flat. Things pulled back a little bit, regained it, sitting. It's definitely going to be an interesting lunch. It does look like we're going to get some sort of melt, but the added volatility definitely makes it unclear. Who knows, to be honest. A lot of points overall. Yeah, when you put a lot of points on, it's definitely easy to lose some, and you can leave some behind. So some of these tickets again. That's why I was looking for the resistance on some of these things like GE here. Like it makes sense that that's it. That's gonna take profit there, right? So keep that in mind for some of your positions. If you're just kind of like, okay, I'll just let it go, and then all of a sudden you lose some percent, wondering why. Well, things don't go straight up forever. We are at a bit of a resistance here. Those charts. and with others, right? That again, not everything needs to put a ton of points on all at once. It's more consistent, percent a day sort of charts. Those also are affected in a similar way, right? Important to keep in mind that it's the way that the price is moving, not so much the price itself. Like Facebook's only up a percent, but that move is very similar, right? It's the same price candle sort of move, and you have to keep it in mind the exact same way. Even though it's not 10% or 5% or something. This is 1% that's trading in the exact same way. It needs to be traded similar. Right? Very fun day. I I'm not really sure what happens with the average of you get take profits on some of the tickers that are very far ahead, and then some of those start to then go to the other mega caps. I have no idea what that relationship is. It's probably again we've already put the points on. It's just gonna be a break even day. Just you're gonna finish at the exact same point we started at again, right? That's what it looks like. We put the points on, good enough. With a hint of upside, hint of upside. That's about it, folks. Very, very happy about today, and very exciting and interesting. And there's a lot of things that we're just going to have to watch and see. Uh, we're not going to get everything right. Uh, things are. Where would you consider transition for ELY? We were sort of already looking at that. Load it up. We were sort of already looking at it from yesterday's candle, and this is again where you don't. I think what I said yesterday. What's really what I would say is that there's not really anything here that there's a point at which you say, oh, okay, that's where I'm gonna do it. It's just based on your own position and how you want to do it. You can do it at any point. You can just take profit right this moment. You can do it right now, and then re-enter. Right? You have to be aware, of course, if you're re-entering that you're re-entering at a high, and it's more likely that you're not going to gain points immediately. Now, that's where things like yesterday I talked about, since it was gaining momentum yesterday, if you were able to do it in that very first sort of that that sprint that starts, right? If you're able to take profit and enter those new ones so that you get all of that gain on the new contracts, that's how you if in a perfect world, that's when you do it. I talked about on the trend line, perfect world, you're trying to get it on the trend line here to the upside so that when you enter those new contracts, you're already gaining that new exponential, right? Um, it's the same thing, right? If you go to the actual weekly chart, this is what I said yesterday directly was that on the weekly log chart, you keep trading into the trend line. So you're going to want to be able to take the position on the trend line, right? So if you transition by taking profit now, you want to be able to re-enter on the trend line. At some point, it's basically confirmed it's going to trade on this trend line. You can keep maneuvering around it, right? Every time you push out of the trend line a little bit, take the profit onto the trend line, take it, right? You don't want to do it too often. You don't want to scalp your whole way up, right? This is already a big gain. This is, again, when you look at the weekly chart from where we entered in here, already a big gain. And so you just want to do that every couple weeks, few weeks, however fast it moves, right? And or if it goes to the upside this way, then uh, you're going to be in an interesting position because it's going to be putting points on, and we'll have to look for new daily consolidations. But here, yeah, it's all about the trend line that's close by, and again, using sort of the days that put a lot of points on quick, because it does kind of suck that when you buy new contracts and then nothing happens, you don't want to be doing that, and so you do need to be patient on the reentry, right? If nothing's happening, unless, for instance, it was yesterday and you see that happening at open, and we kind of again we have this hints of momentum trading, then putting it on then is like best case, but that's of course in hindsight. So uh, there's nothing wrong with taking profit ever. There's nothing wrong with it. No one should ever criticize anyone for exiting a position. You can always get back into it. So, um, yeah, at any point, if it feels like, okay, this is probably, you know, I'm up, I'm not really gaining much more, I'm 1-to-1. I'm okay taking this here, and then you just can wait and see, feel it out, see when it's going to happen. If it starts going to the upside, then take it again, right? You can get stopped out of it if it swings back down and it's unclear what exactly is going to happen. But it's never wrong to take the prize home. So let's take a break for lunch, guys. I'm a bit tired here. This is pretty fun day, and again, the market just on an average isn't doing shit. So that's great for and really fuels this kind of thing. And uh, I'm I'm absolutely sure it's not done with some of the moves that you're seeing. We're going to see a lot of different tickers getting involved, and the meme tickers do continue. So this is another day, almost 20% on AMC here, and you're seeing it everywhere. And there's again, it's going to cause volatility. It's going to cause moves that are a little bit more, and you need to be aware of it. And um, yeah, a lot of money out there, a lot of money to be made. I'll see you guys this afternoon. I'm excited to see what happens the rest of the day. Close is probably going to be a lot of fun. Don't forget the big boys out there, that the real players that put their orders in at the very end of the day. We'll see what those look like. So enjoy your lunch, and I'll see you in a little bit.